Live. Good morning, everyone. I'm gonna enable a public chat for a second and ask if you guys can hear me. So those who can, please just press plus so we know that you guys can hear us and everything works. All right, I think the plus came in. All right, couple more pluses getting in. Very cool. Looks like everything works. All right. Well, thank you very much, everyone who have joined, and I appreciate your time. Let's wait for us another minute or so to have more people joining. I think we have more people registered than have joined already. Those who came earlier, thank you very much for being early. Early is on time. I appreciate that. So our agenda on this webinar gonna be mostly about Bitcoin mining and specifically Bitcoin halving. We will talk a little bit about how Bitcoin halving happens, why it matters, and then at the end of the webinar, we're gonna have more questions, and we would like you guys to submit the questions in the public chat. We will disable the public chat within the next couple of minutes after more people join, and then we will enable it again. I think closer to the end of the webinar, so you can submit your questions. There will be no direct communication in this webinar. There will be only the questions submitted in the chat. So please do submit your questions in the chat so we can have a more productive Q&A session at the end. Okay, I can see more people popping up. Welcome, welcome. Looking very good. Well, some people actually leaving too. Okay. So those who have joined, can you please put a plus in the public chat to tell us that you can hear me? Wonderful. I can see more pluses coming in. Good. More pluses. Great, great, great. Wonderful. Good. Perfect. Thank you very much, everyone. More pluses. Apparently everything works. Everything works. Good. Well, for those who have joined, welcome again, and thank you for joining. Appreciate your time. So I think we're not going to wait for any longer. Those who will join later will have to catch up. Okay. Let me start the presentation. Start presentation. Okay, great. Well, halving 2024. This is a very significant event that's going to happen next spring in a couple months, and it will show us what Bitcoin mining going to look like for the next cycle, which is 4 years. So before we go, let me first introduce myself. And for those who don't know me, I want to explain why I think I have some experience and knowledge and why I can be considered a thought leader here. So my name is Sergii Gerasymovych. I'm a CEO and co-founder of Easy Blockchain. My experience in halving language, 2 halvings, third is coming, and 2 crypto winters. Not only 2 crypto winters, we're 2 crypto winter survivors with a way bigger company than we were 5 years ago or 6 years ago. I believe that this crypto winter has been the most brutal one, and it's actually is not over. I think it will be over only after the halving happens, and we're going to get through the cycle for a few months. That's when we will see the results, who survives, who doesn't, and that's only then where the market is going to start moving or not moving. Let me repeat a little bit about our agenda. So we're going to discuss what is halving, who will stay in the game, what can we do to prepare for that. We'll touch a little bit on mining equipment, and of course, we'll discuss, should we buy more mining equipment and when? And I do have to mention why you should work with Easy Blockchain. So Halving 2024. What do you need to know? How to prepare? Well, I think we can discuss a few tips and tricks that are going to very much influence your strategy for the 2024 halving, because this halving is very different from what it was a few years ago. There is way more money in the industry. Bitcoin price is way higher. There's a lot of scrutiny in the cryptocurrency. There have been a lot of bad actors in the cryptocurrency. And Bitcoin's price, because of that, had a very big pullback from its top price of $68,000. So Bitcoin halving, what is it? What is halving? Well, if you have joined this webinar, most likely you're interested in Bitcoin topic, so you definitely know. But I still have to mention that Bitcoin halving is an event that happens around once in 4 years. And that's when the reward block is slashed in half. So that means the amount of Bitcoin emitted to circulation is 50% lower. That is what makes Bitcoin so attractive. Basically, Bitcoin is an asset that is finite, and every 4 years, less and less Bitcoin will be generated or given into circulation. So usually Bitcoin halving have coincided with the beginning of the next bull run in the cryptocurrency and Bitcoin itself. Why did it happen? Well, most of the important thing is that even if the demand stays the same, the supply is becoming lower. It's way more limited. There will be less Bitcoin mined and less Bitcoin sold, because most of the Bitcoins that are being mined are generated by miners, and miners do sell their cryptocurrency, Bitcoin specifically, to cover the cost. So usually the Bitcoin bull run, as they say it, starts in a few months after Bitcoin halving. That has been historically like that. So on this slide, I want to show you 3 halving events that already happened. There have been so far 3. So one in 2012, another one in 2016, one more in 2020. And we have the 4th one coming in 2024. I personally got to live through the 2 of them, 2016 and 2020. So the first halving event happened so long time ago that Bitcoin price was less than $20. And technically, if you look from macro perspective on this, it has not been that long time ago, because it's been only almost 11 years ago. Even though Bitcoin price was less than $20, right now we're more than $36,000. Regardless of a big drop from $68,000 to 16 and then a small jump up, we're still in a good spot if someone from you bought Bitcoin in 2012 or even after that. But on this specific chart, you guys can see that first halving was the event that actually started the first real bull run in Bitcoin. The price jumped. It went to a couple $100. I mean, in today's world, it's unrealistic to think about Bitcoin a couple $100. But this is what really happened. Second halving. So second halving happened in 2016. That's in the area where Bitcoin actually became more popular amongst bigger financial institutions. That's when people actually start talking about it. And that's when there have been more exchanges coming online where you could actually trade your Bitcoin. I remember 2016 very well because at that time I had no idea what Bitcoin was. But after the halving, the price of Bitcoin started moving and everyone started paying attention to it. So that's when me personally and the company started jumping on the wagon, as they say. And we've been riding it ever since. So the company Easy Blockchain that I work for, as well as me personally, had to experience the bull market of 2017 to 2018 and the bull market of 2021 to 2022. Those are the two halving events that were predecessors to the bull market. So the third halving was the biggest change to the whole macro level of the Bitcoin industry, because that's when Bitcoin started running to a very high number and it started attracting people from many industries. There started being talks about establishing Bitcoin futures. The options were started traded on the exchanges, and the Bitcoin specifically started to become more institutionalized asset. And that mostly what drove the price to a $68,000 to $69,000. So next halving is in around 156 days. This is a screenshot of the day I was making the presentation, which I think was yesterday. So we have not that long left to see the block reward slashed in half again. That will be in April 2024. So what's going to happen to miners? What's going to happen to mining companies, big or small, after that event? And how it influence them? Well, the most important part is that now Bitcoin miners, instead of 625 Bitcoins per block, going to start making 125. And that's a big difference. So if we look into perspective here, in order for any miner to stay in business with the same crypto mining equipment and the same inputs on power and the same operating costs today, the Bitcoin price during the halving has to be around $70,000 to make the same profit that you guys making now. That's twice. I think we have seen through the last couple of years the halving does to Bitcoin miners. What it does is sometimes brutal because a lot of companies or players don't survive that. Why don't they? And who will stay in the game? Well, most of the people who don't survive have very high hosting fees or high electricity costs, and they have debt, and they don't have a strong operational team, and of course the equipment is not that efficient. So obviously only those will stay in the game who do have a very reasonable electricity cost and hosting fees, low on debt, and have strong operational team. And I think one of the most important parts, have efficient equipment. Unfortunately, the bull run of 2021 to 2021 to 2022 have driven the cost of crypto mining equipment to insanity. And a lot of people did buy the cryptocurrency mining equipment on the top. So that means that those players are still sitting with that equipment and they have not sold it because that equipment has not made any money yet and is far from making any money. And that's a big issue. It's a very big issue from the players who have already got in the game on the top, because most likely, if they don't throw more capital, small or big, they will not survive the halving. So what can we do to prepare? I think it's a billion-dollar question. No one has a crystal ball, and no one knows what's going to happen after halving. Maybe the price is going to drive to $70,000 and higher. Maybe people going to stop believing in Bitcoin and just going to sell the coins that they have and leave the industry forever. Maybe Bitcoin ETF will be approved, and it will bring enormous amount of institutionalized capital to the industry, and Bitcoin price will go up because there will be more demand. All of those are maybe. But what matters is what can we do today to stay in the game if everything stays the same, if Bitcoin price stays the same. And if you a new player, or if you are a new player, a small miner who wants to put 5-10 machines, heard about Bitcoin for 10-12 years, but never actually pulled the trigger to get into this industry, I think this is a good time to figure it out. So I would like to start with very important part for us as a company, operational costs. I think there are a few team players in this webinar, and they hear me out all day about when I hammer one and the same thing. Operational costs have to stay low. Operational costs have to stay low. And there is important reason behind it, because operational costs matter. They matter for the whole survival through tough times, bad times, and good times. Because the margins can be so low that sometimes you will not be able to operate. And in Bitcoin mining business, the most important part is to stay online. If you stay online, you can always catch a high price of Bitcoin and keep mining coins. But if you turn off the facility, it's very tough to bring it back online. So what are operating costs? According to JP Morgan recent report on Bitcoin mining industry, operating costs are equal to a miner power consumption plus data center power consumption times power price plus other operational costs. It seems like very straightforward, and it is. However, the biggest drivers of cost of running cryptocurrency mining farm would be miner power consumption and, of course, the power price. Power price could be so volatile that it can change your margins in Bitcoin mining in any minute. Because in reality, Bitcoin mining is a very low margin business. Contrary to popular belief, Bitcoin miners are not printing money from thin air. It's not really virtual money. It's very hard work. It's infrastructure development. It's operation. It's electrical power lines development. It's developing land. It's running operations. So let's get a little bit in more details. I have a few items right here. What matters and what we should do. Besides the power cost that you can control only by having a good power contract or hosting contract with your counterparty who offers you hosting services, and besides the crypto mining equipment, it's very important to actually focus on other operational costs. Give me 1 second here. And other operational costs matter because there's so many details in how you run a particular facility where your crypto mining equipment is being hosted. So there are facility maintenance operational costs, such as we have to spend money on changing filters, we have to change fans, we have to upgrade electrical breakers. That's all cost. We need human capital to do that work. Mining equipment management. Hash boards always break. Control board fans always break. You always need to fix that. For that, you need people. People need to do work for that. You have to pay them fairly. Network operation, very undervalued department. Usually people think, oh, you just put the miner on the shelf and everything gonna work fine. Not really. It's not enough to put the miner on the shelf. You have to configure that. You have to maintain uptime. You have to make sure the internet is flowing correctly. And most importantly, that all changes when you have not 3 miners online, but 30,000. The networking scale is different. That means the problems are different and approach should be different. Electrical equipment maintenance, very big operational cost. Equipment doesn't work sometimes. You have to figure out why. You have to change cables. You have to change breakers. Team management, very important one. Not only you have to have people who are going to do facility maintenance, networking operation, electrical equipment, you need to have team leaders who are actually going to manage all those people. Because it's not enough just to say, hey, go and fix the breaker. When you have a larger operation, the team management focuses on making all work efficient, so your operational costs, which are other costs, shouldn't be high. And obviously, there is an administrative overhead. Every mining company or hosting company has to get focused on these items, very in particular, because having cost of power is not the most important part. Power cost usually is equal to 85 to 90% of all costs. But there is another 10. And other 10 would be this other operational costs. And it's so important to get focused and make on this cost and make sure that these costs are staying in line. Because you can have the cheapest power in the world, for example, 3 cents per kilowatt hour. But if your operational costs would be equal to another 2 cents per kilowatt hour, then your cost of power is not really 3 cents, it's 5. I think I'll pause here for a second and just want to tell everyone, please start putting your questions into the chat. We have opened the chat again, and we will be able to answer all those questions at the end of this webinar. So please add your questions there, be as specific as possible, and I would like those questions to be more oriented on Bitcoin halving and Bitcoin mining. Thank you. Mining equipment. So after 2020, let me double check. Okay, got it. Everyone has it. So after 2024 halving, many miners will become unprofitable. But not all miners will be unprofitable to turn off immediately. Usually, there is a period when miners will accumulate enough Bitcoin and hold that Bitcoin with the hope the Bitcoin price goes up so they can sell those Bitcoins and cover their costs in the past. But that strategy doesn't work because usually you have no idea how long that price is going to stay where it is. And maybe it doesn't go up ever. Who knows? So running at the negative level is always a problem. And a lot of mining companies who have old equipment and have high input power costs and very high operational costs going to be running negative. But since there is, again, a human emotional factor here, they will run for at least a little bit, a month or two, close to negative or maybe at negative, to see what happens. So those market participants who have updated their equipment, who have updated their equipment for a new one, would be in a good spot. But it depends on which cost they updated that equipment. Because at the end of the day, Bitcoin mining is a business as everything else. If you spend $1,000 to make $300 and then spend another $1,000 to keep making $300, that doesn't do anything for you. So what is important is to make sure that if you have all the equipment, you need to make sure that the equipment runs as long as possible at very low power costs until it actually breaks, and you have enough money generated from previous operation to invest in new equipment to update the older one. I think that those market participants who do not have equipment higher than 100 terahash per second will not make money within the 6 months after halving, unless, of course, Bitcoin price goes up. But if Bitcoin price goes up, there will be more demand and there will be less rewards to share amongst everyone. So if you are a new miner, what do you do? If you are a person who just decided to get into Bitcoin mining today, well, I think the only mining equipment that you should buy is with efficiency less than 21 joules per terahash. I think though that equipment will be very much competitive. You will stay in a game for quite some time. Not only that, you will be able to stay afloat even if the price goes down after halving. And the price of that cryptocurrency mining equipment is not that high anymore. What should you do differently from the halvings from last cycles? Well, you should not be waiting for your equipment for a very long time. You don't spend money up front and wait for equipment in 6 months. Because the moment you take your money out your bank account and spend it, the clock on return investment starts. It doesn't start when your equipment arrives. It starts the moment you get money out of the bank account. So if you started today and your equipment arrives in 6 months, that means 6 months you have not been making money. You can't start your clock on return investment from the day your equipment arrives because you have no exact date when it does. And between those 6 months, cryptocurrency price may go up or may go down. So I would recommend, if I were in the shoes of a new miner, I would not wait for longer purchases and I would not pay money up front. I would pay for the equipment that is available readily and I would turn it online as soon as possible so I can start receiving return on investment for the money I've just spent immediately. For that reason, I would stay within 21 joules per terahash area because new equipment doesn't mean best results. New equipment is good because it mines more Bitcoin. But at the end of the day, remember, it's business. You have to calculate your return on investment. You don't want to get into the business where you just hope to survive. And sometimes Bitcoin mining feels like that. So I would recommend to look for the equipment that is available and the equipment that will allow us to go through the halving in the next year or two. There is big tendency amongst bigger miners out there who are publicly traded companies, which are publicly traded companies, to buy newest equipment, install it, and run it. But in reality, those companies usually use equity or debt to fund those purchases. And that game is different. And if you are a small miner who wants to buy 3, 5, 10, 20, even 100 machines, you shouldn't be looking at this purchase from the same perspective the bigger company would. Because you are not a bigger company. You spend your own hard-earned dollars. So efficiencies. Since we started talking about joules per terahash, we need to start talking about efficiency of equipment. There is a big debate. How would you want to run your equipment? Do you want to run it in air cooled or immersion or hydro? And that's one of the new things that have not existed in previous halving cycles. Because mining efficiency depend not only on the chip, how many terahashes is on the chip, but also on ability to cool the chip. In 2021 to 2022, it was the era of immersion hype. But frankly saying, immersion cooling is very great on operational level, but it's very expensive on capital expenditures level. So it makes sense to mine in immersion only if you want to overclock your machines. If you have the machines that have a special software and special control boards and allow you to squeeze as much as possible from them, that's the best way to do immersion cooling. And Easy Blockchain does offer both of those services. We provide hosting in air-cooled and immersion. Air-cooled infrastructure, on the other hand, is way easier. It's easier to set up, it's quicker, and most importantly, it is 3 times cheaper. And we can work with more types of equipment in the same facility. So in my opinion, air-cooled infrastructure will work better on a short term with the next halving, with the next halving cycle. Therefore, every time you as a market participants want to install your equipment with the thought that you want to survive through the halving or make more money through the halving, you should definitely consider many options. And you need to make sure that the uptime of your equipment is high. Both air-cooled and immersion technologies allow to gain a very high uptime. But if you have an options to overclock your equipment, you definitely should go with immersion. That will help you to squeeze more terahashes from your equipment during the hard times, which I think would be coming during the halving. So then there's another $1 million question. Should I buy more equipment and when? Does it make sense to buy it? Well, all of that depends. What is your strategy? Is your strategy to get into new business? Is your strategy to survive with what you have? Or is your strategy to do this for fun? Obviously, for every answer or for that question, there is a different strategy. But I would say if you are a player who really wants to get into crypto mining, that is the best time. The crypto winter has been very long. The Bitcoin is not dead. There is a lot of positive sentiment. We have, I think, close to a dozen Bitcoin ETF applications pending. And I think Bitcoin has become way more stronger after FTX saga than any other crypto asset because it has something behind it. It has infrastructure behind it. It has people behind it. And it is finite. It has proof of work consensus mechanism. It does help to know that because Bitcoin is not printing from thin air. So it always makes sense. It always makes sense to buy more equipment, obviously depending on your budget. But when you do buy more equipment, you need to make sure that equipment is the right equipment for your specific strategy. So why work with Easy Blockchain? If you are a player who is interested to get into Bitcoin mining and interested to survive through Bitcoin halving next year, I think you cannot find a better player than Easy Blockchain to work with. Because we have been in this hardware business and crypto mining business for a very long time. But Bitcoin mining is interesting because I believe it's a hardware business that moves with the speed of software business. And what our company learned is that we can move with the speed of software business, even though we're hardware business. We operate facilities on large scale. We develop facilities quickly. And we have had 6 years of experience of doing that. And in Bitcoin mining world, that's eternity. We have a professional data center operational team. I think we're the only company that has a specifically assigned site reliability engineering department, where we specifically focus on the uptime, where we specifically focus on our hash rate, not only for the equipment to be on the shelf. We are the supplier of low cost clean power. Our facilities are very much diversified. We have locations in Georgia, South Carolina, Kansas. We're building more facilities across the country. And most important part, we control our destiny. We have our own mobile data center supply chain. All of that helps us to be very effective during the tough times. And in Bitcoin mining, those tough times are very often. So let's conclude. Well, Bitcoin halving is a pre-designed event that makes Bitcoin Bitcoin. It's inevitable, but it also shows that Bitcoin is a finite asset that has many different features. It's an asset class that has the features of gold. It can be considered store value, can be considered a medium of exchange. And at the same time, you can print more of it. It's up to you what you use Bitcoin for. You want to send this as a money to buy something in El Salvador, or you want to hold it until 2029 or 2050 so you can sell it at the higher price. But what matters is that such events as halving and difficulty adjustments are the events that make this asset class the only asset class that with the time actually has its value going up, not because we print more, but because we emit more into circulation. It's completely opposite to Federal Reserve system that would just print or add more money based on the economy. Well, thank you very much for your time. I think we are open for the questions right now. All right, how do you think the halving will affect your operating cash flow and your net income? That's first question, and there is another question. So first question, how do you think the halving will affect your operation cash flow and your net income? Very good question. Thank you for asking. I think it will drastically change the way we do business, obviously. And that's why we have been focused on operational cost and power cost. We have been renegotiating our contracts with power providers so we can stay within a very low cost of power, as well as we can keep our operational costs at the low level, even though we can still keep growing. It's very important to understand that not only we will be in this business, there will be other players, and those players who would not focus on their power costs and who would not focus on their operational costs will be the first one to shut down. And when that happens, the difficulty will adjust, and we as a company will become with a better position at that time. So I have another question from Tina. Do you think moving operation to Texas exclusively would be smart for miners, considering we can procure more favorable electric rates? It's a very good question. I have actually a lot of experience in Texas. I would say that Texas does not really have the most exclusively cheap power amongst all states in the United States. I think there is very big political risk at this point, and the competition in Texas for power is very high. We have very large miners already operating there, such as Riot, Big Deer, I think Cipher, Iris Energy. They're like big players, and they have hundreds and hundreds of megawatts. So they are the companies who would be able to get the cheaper cost of power. But if you're a smaller player, and when I mean smaller, it's I think even in tens of megawatts, it's very tough to procure energy at that level as those big players could. And at the end of the day, all power, be it Texas or United States as a whole, depends on the price of natural gas. So what's important is for natural gas to be within a reasonable rate. If that's the case, then power will be less volatile across the whole country. But I think exclusively moving to Texas would be a bad mistake because you are very much exposed to one jurisdiction. And obviously, there have been some bills that have been brought up in Texas legislative sessions that were against miners. So that's why we try to be more diversified. I have one more question. Do we see similarities in three halvings? What can we learn from graphs you showed before in this presentation? Very good question. Thank you. I think the biggest similarity between halvings is the price goes up, and most importantly, it doesn't go up immediately. I think it takes time for the price to start going up and the market to adjust to a new level of Bitcoins going into circulation. And only then people start to realize, oh, okay, this is a real asset that now has more demand but less supply. I want to be part of it. And the more people start to learn about it, and the longer Bitcoin exists, the better it's for Bitcoin, obviously, because it's becoming a bigger brand than just cryptocurrency. It's becoming its own asset class. So I think those charts would show that most likely the Bitcoin price would go up. But again, those charts are not the guarantee they would. No one really knows. We're just speculating. And it all depends, our level of speculation will depend on our belief and, of course, on our knowledge in how Bitcoin mining works. And I think the most important part of that would be that there is less supply, but more demand. All right, I have more questions. How would halving affect mining difficulty? Very good question. I think in the first month of mining, the difficulty will drop around 20 to 25%. I think folks who had 80 plus terahash miners, and believe it or not, 80 to 90 terahash miners, those folks will shut down, at least temporarily, before the price recovers. And that's a huge part of the network. Specifically in the United States, there are jurisdictions where people mine at 3-4 cents power, but there are not that many. Contrary to popular belief, I don't believe there is free power. And there have been a lot of conversations that you can get very cheap power somewhere overseas. You can, but it's very limited. Another question. Wouldn't you have to cut your code in half if production is out in half? How do you get power and other costs down if they're already low? Very good question. Well, I think the operational costs that we have are in a very good spot, and you can't get them lower. You can't cut them in half again and again. What you could do, though, you can create an infrastructure overhead infrastructure, operational infrastructure to allow you actually increase your business. So instead of cutting our code in half, we would like to grow our um, our operations in half. We would like, from hosting perspective, we would like to sign up new clients with newer equipment, and we would like to diversify from that. But you can't keep operational costs very low, because that's bad for morale, and it's bad for honestly for people, because they make mistakes, and your uptime is going to go down. So it's very tough to um, it's very tough to envision specifically how it would work in other cases. But in our case, I can say that we're set up very well. I can say assuredly here that our operational costs in kilowatt hours are the lowest in the industry in America. There's no one lower than we are, and we achieved that by, well, growth. We can operate more locations with specific structure we have, and we very much rely on the folks on the ground to do the work. We rely on them. We give them power to make their decisions. Sometimes more, sometimes less, and that helps a lot to increase our well, decrease our operational costs and increase our ability to grow the business. um, where do you see Easy Blockchain in 2 years? It's a very good question. I think in 2 years, Easy Blockchain will be a way larger organization in terms of operational fleet of crypto miners, and we will be focused more on a proprietary mining. I can't say about more of other lines of business that we're considering, but there are some. But we would like to get focused more on crypto mining. There we are. But what most of the new things that we'll be introducing would be our retail product. We want to make Bitcoin mining more available for a retail customer who wants to put 3, 5 miners, but we want that to come with a good service and actual profitability in the end. That's why our goal is to lower our costs of power and costs of operations, so we can allow other market participants to find cheaper hosting, and that cheaper hosting would be at our locations. The only way we can do that would be being vertically integrated, control our operations, and control our manufacturing mobile data centers, control our construction, and that's how we could cut cost. How much do you expect the halving to affect ASIC prices? I think very much. I think the S19's XP is going to be in a couple $100, and I think that the new equipment will also start being cheaper. We've seen that before. Like, for example, I remember very well the S9 machine. The peak price of S9 machine was I think $6,000 per unit, and there was a time where you can buy it for $50. Obviously, there was a very low price because there was a lot of supply. But I think in reality, where the Bitcoin mining equipment prices should be is they should be cost plus margin. I don't think they should correlate with the price of Bitcoin. And big manufacturers of crypto mining equipment may not agree with me, but it's very tough to do business when you buy a machine as a commodity and it just changes price every minute, because thus you just better not buy it. You'll just take a pause and wait for the better times. Otherwise, it's just too complicated. So to conclude, I do think the price is going to go down, but I think we're going to keep innovating in terms of chips. The speed of innovating the new equipment will not be that fast anymore, but we will still see good progress. I'm very hopeful to see new participants in the market who could compete with the largest players out there. And I hope those participants know the pain. I mean, new participants would know the pain, and those participants will actually listen to the customer. In your opinion, what will BTC mining operations environment look like in the future? Next few halvings over the next 12 years. Who will be doing most of the mining? What will the equipment look like? Will there be smaller hobby miners or personal BTC nodes still? Very good question. Very good question. I personally do think that um, I personally think that in next 12 years, the equipment, the crypto mining equipment, will become very sophisticated equipment. It will be the same level of equipment that we can see that we could see um, in basically NVIDIA video cards, right? In GPUs from AMD. That equipment is very high level, and it doesn't overheat that quickly. It meets the specification on the box, and I think that's what we're going to see. I think end of the next halving, most of the equipment will start be water cooled or immersion cooled. I think we're going to see less and less air cooled equipment going forward. Within, I think that's like starting end of the next halving and next 4 to 8 years, there will be more and more water cooled equipment. That's where the data center industry is going to. The data center industry is going into cooling with water, and I think that's where the Bitcoin mining industry would go. We've seen early on tests from Bitmain. We have seen early on projects from WhatsMiner. They look good. There's not a lot of data to support if it's the way to go, but it's definitely going to be the way to go in 4 or 5 years from now, because the technology grows and those chips become more and more expensive. You will not be able to cool the $100 chip with air and dust. You will have to create a special environment. So I think Bitcoin mining industry will become more tier 2 data center, tier 3 data center level industry in the next 5 to 8 years. And I see there was a change from a person. It's not a coat, it's a cost. Well, I took that as a metaphor that you put a coat, so it worked anyway. Does Easy Blockchain sell or help small miners procure hardware? Yes, we do. Easy Blockchain has just recently introduced a new product, which is actually called I'm a New Miner. What do I do? And you press a button and we procure equipment for the customer, as well as we do hosting for the customer. That we can go as small as, I think, 5 or 6 miners, and we do procurement and we do a package of hosting with us. Those hosting fees are very much reasonable. The reason for those are that we want to get more and more basically hobbyist crypto miners into our business. I think we're at the level with our experience that we can offer good service, and we want the customers to participate, because we are at this point not afraid to sell our hosting or our services to more customers, be it one customer, two. We're not afraid to provide them customer service because we know we'll be good at operation. Operation is the key of Bitcoin mining in general. If there is no good operations, Bitcoin mining will fail. Bitcoin mining is not Excel spreadsheets forecasts. Bitcoin mining is hard work on the ground in loud environment, with wind blowing your face, with when your hands are cold, when you have to put in the cable, be it networking cable or power cable, and with that, you get a good hash rate. If you have a good, strong team, by the way, kudos to my operation team. If there's anyone listening, you do have a good operational team, which we do. You can be very much comfortable of selling hosting or smaller projects to smaller guys who just want to install 5, 6 miners and not worry about it. And I have another question. Should we sell Bitcoin now or hold until after the halving? This is a very good question. Unfortunately, I cannot give any financial advice, tax advice, or legal advice. But I think from all of this presentation, what it says, what I'm trying to say, and maybe I have not been vocal enough. What I'm trying to say is that Bitcoin halving is one of the major events that drives the price. It doesn't drive the price immediately, but over time, historically, that's what's been happening. So I would say if there is Bitcoin, the price of it gonna go up, most likely because of the halving events, not because of you know, not because people thinking it's cool. It's because there is the demand we have today is enough to meet the supply. I think it's more, the demand today is more than supply, which will just become twice less. I see someone saying hodl. All right. Well, I don't see I have any I don't see any other questions there. If you guys have any more questions, whoever has questions, please do ask them. I appreciate you everyone joining this webinar. It's a first webinar of this kind that we publicly having. We will try to have more of this webinars going forward and show the world, the public, what we actually do. You will hear not only from me, but from other participants of of our operations, from our team, other team members. We would want to talk about how we believe we can achieve success and why. And if you are a miner who want to do business, you would hear why it's worth to do business with us versus someone else. I have one more question. Oh, no, that's thanks. Well, thank you, Mike. Well, guys, everyone, thank you very much. If you have more questions and you think about something, well, just send an email to info@easyblockchain.net, and we'll be more than happy to answer those questions. If you guys interested in maybe working with us, either working for the company or being a client for our hosting service, or just want to talk about anything, just reach out to us. We'll be more than happy to talk to you. Thank you. Bye.